Good morning, ladies and gentlemen. How are you all doing? Hope you had a lovely weekend and wish you all the best for the US elections week. I'll go ahead and fill you up with all that you need to know to prepare yourself and have a successful trading week. So, there's Abhishek Raj in Ask Abhishek Raj Mastermind weekly session on Monday morning. So let me quickly take you through with all the data and all that you need to know to plan your trading week and your portfolio ahead. Let me share my screen with you. So today I would begin our mastermind session with one of the very famous quotes from Jesse Livermore. He's the history's greatest trader ever. So what he said is, a man can never ever have enough reasons to buy and sell every day. You cannot be trading every day. This is the quote which is most relevant in today's scenario, especially if in case you are not a seasonal trader, you are a professional trader and you want to be a full-time trader, you take trading very seriously. If that is so, this quote is especially very important for you. And I'll tell you its relevance at the end of the session. So first of all, let's take a look on the charts of Nifty, Bank Nifty, and what are the stocks and sectors that you should be looking at to buy or sell. So having said that, so what I'll do today is I'll take you up through the monthly, weekly, daily, and hourly charts of the major indices so that it can give you a complete insight of how markets can start tomorrow, can trade tomorrow, and how you should be planning your not only intraday trades, but your positional trades, your portfolio, and everything. So let's start. Number one, this is the monthly chart of Nifty. What you can see is in last 3 months, we have some upper shadows and some kind of discomfort. Nifty had already reclaimed close to 12,800, 11,800 levels in the month of August itself. However, this month we did make a new high of 12,030, I guess. Yeah, that's 12,000 range, and we have been getting resistance continuously on the same level. So more or less, this particular price range box is going to be very crucial for you. That's 11,000. So unless and until we go below 11,000, the trend is not going to change. The RSI on monthly chart is approaching 60. So it would be very important to see whether we cross 60 and become bullish, or we take a resistance and continue sideways movement. Now, one thing very important, if you consider the last 3 sessions, this is a kind of advanced stalled pattern. In candlesticks, there is a pattern called advanced stalled or advanced block when we have 2 to 3 candles on the upper side with a higher wicks or smaller bodies. What it actually means is the uptrend is there. However, there is kind of discomfort amongst the bulls. So the uptrend has taken a stall. It has not reverted yet. It has taken a stall for maybe the further moves that could be bullish or bearish altogether. Now let's take a look on weekly chart of Nifty. On weekly chart of Nifty, what we can see is in last 4 weeks, the first week of the last 4, let me just highlight that for you. The first week of the last 4 week, this one was a big bullish candle. That's what we call a bullish belt pattern, wherein a candle opens at the low, closes at the high. Since then we had small body candles, a kind of spinning top to doji candle, and the last candle you can say that it's a bearish engulfing pattern. But one thing very important, this particular last candle did not go even below this particular bullish belt candle. So more or less we have kind of good support, and that's a trading range of 12,000 to 11,500. So any kind of big move is expected only above 12,000 levels or below 11,500 levels. Also, Nifty is trading way above its 20-week moving average. Now, one thing that's negative, that's RSI on weekly basis even fell below 60. So it clearly looks like we have lost the bullish momentum. So even if we see some upside, it may not be sustainable. Now let's take a look on daily chart of Nifty. Now daily chart is little more interesting. Few data points that you should understand. Number one, Nifty has been closing for continuously 2 days below its 20 days moving average. Number two, this particular trading range is going to be very important, and Nifty has taken support on the lower Bollinger Band. So that's one thing positive. Now, one thing very important in on Friday's session, if you take a look on the last candle, I have highlighted both the last candle and the volume with arrows. So it's a higher volume and a spinning top candle. Now, a spinning top candle is a very intense candle, a candle with wherein there were extreme resistance from both bulls and bears. So yesterday's, or maybe the Friday's session, was a very intense day. It was a very close fight between bulls and bears. So any move tomorrow can be a little more, it may come up with some spikes as well. So be prepared for that. But on daily chart, the RSI has gone below 40, so that's negative. Now let me take you through the hourly charts, which can help you with trading on your intraday basis or a kind of BTST basis. So more or less tomorrow, if you see any positive opening, we can take a kind of upside till 11,800. That's 20 days moving average. So unless and until we close above 11,800, we would avoid getting longs. Plus 12,000, of course, the resistance range. If you take a look on the upper range itself, it's kind of a demand supply zone. Either we have wicks, or we have smaller candles, or we have big bearish candle every time Nifty goes to 12,000 range. So more or less it looks like it has made a top on 12,000 range. So unless and until we break this particular top, it's going to be extremely difficult. Now if you see this big black candle, this is a candle when markets made its highs around 12,030 levels. So this is also called a bearish belt pattern, where markets open at high, closes around low. So this is going to act as an extremely important and strong resistance. So upside, whenever you trade or you go long, remember your first target, you could it could be around 11,800 or 12,000. So avoid buying on rallies, wait for dips and see if in case market sustains, only then buy. Plus keep your stop losses on the long positions at 11,500. Any breakdown below 11,500 is going to be extremely negative. On hourly chart, if you see, the last 3 hours were kind of bullish. However, the last hour's candle was a very small candle. So in case markets goes up, you can be seeing market testing its trend line resistance around 11,700. On the downside, 11,500 is your support. Plus it's making lower lows, so I would suggest avoid longs unless and until Nifty goes above 11,750, because that's the previous high right here. Now let's take a look on Bank Nifty. Again, Bank Nifty is comparatively better than Nifty. It closed its month on, you can say, last 3 months high, completely sideways movement in last 3 months altogether. August, September and November, they both are in the same range of 22,000 to 24,800. That's more or less 24,000 closing. So this 2,000 point range is going to be important. So unless and until we break this range, don't expect any surprising move. Plus, if you take a look on this resistance level, that's the RSI even is around 50, so that's a kind of sideways movement. So your trading range for this particular month is going to be 21,500 to 23,000 to 24,000. So in case markets falls, your first support area would be 23,000. On the upside, it could be 24,000. And extreme cases, 24,800 to 25,000 is your maximum resistance range. So that's going to be very important. Let's take a look on weekly chart of Bank Nifty. On weekly chart of Bank Nifty, the last 2 weeks are kind of bearish engulfing pattern, but I will call this a weak bearish engulfing pattern because the bearish candle is not very long. So it is a bearish engulfing, but again, it's a weak one. Plus, on weekly basis, we are facing resistance on the upper Bollinger Band. It's 20-week moving average. Let me pull it down. It's 22,500, and this price range, the highest price of Bank Nifty, that's 25,200, is the window gap as well, window gap resistance. So unless and until we get a closing above 25,200, it is not wise to go for positional longs. Plus, RSI resistance is taking at 60 levels. So this also indicates that we have on the upside a lot of resistance. It will be very difficult for markets to sustain on top on the higher range. Even if we get some upside movement, it would be difficult for the markets to hold the upside. Though it is not wise to go short as of now, but yes, on the upside there could be limitations. There could be topping ups also added by the uncertainty due to US elections. It could be difficult as well for markets to sustain a top. So when you trade, consider Friday's low and high to be your main buying and selling ranges. Around 24,000 to 24,800. In case markets go above 24,000, then you should be looking at 24,500, 24,800 on the upside. You can trade with some small stop loss on the long side depending upon how moves happen tomorrow. Now, I'll suggest you why you should avoid shorts as of now. At the end of the session, let me just take you through the daily chart as well. Now, on daily chart, if you take a look, what has happened is Bank Nifty has taken support on the previous gap, so that's good. Number two, Bank Nifty has not closed below 20 days moving average, so that's also very good. Now, 20 days moving average was broken on intraday basis, but not closing below it. So that's something very good. However, RSI is around 50, so that's kind of sideways movement. Bank Nifty's 20 days moving average is 23,800 as of now. So any close below this level, or I would suggest you Friday's level, any close below Friday's session low could be, can open up some space on the downside. On the hourly chart, even if you take a look, Bank Nifty is trading in a trend channel of 24,150 to 23,350. So in case you get a breakout above 24,150, you can try some long positions on intraday basis. Rest I'll keep you posted on the real time basis. But again, I'm not very much sure on the upside because RSI is still below 60 and it's trading around 40, so it could be a limited upside, remember. And avoid going long unless and until this trend channel of 24,150 is broken on the upside. Now, few things very important that is going to actually give you hints or cues on managing your positions. This is going to be both global and domestic as well, the data that I'm going to share. Number one, UK in your, European markets are seeing more weakness due to coronavirus rising in Germany, in Russia, in UK. Lots of UK countries are facing difficulties on coronavirus situation. Plus, UK even have announced some lockdown measures. European and American markets are already approximately 10% down from their highs. All major global indices are on a short-term negative biasness. Historical data suggests that majorly every time US presidential, US president is re-elected for the second term as well. So in case Donald Trump loses this time, it could be a kind of historic movement. One thing very important that's based on the psychology of human beings. Whenever we are negative, when we think negative about something, we are very outspoken. We tend to we tend to express ourselves. We're more expressive. So in elections terms, what happens is whenever you see a spike in voter turnout, it always leads to majorly, most of the times it leads to change into the rule. Now, why I'm sharing this with you? In the pre-poll voting that's happening right now in the United States, so that people avoid long gathering or crowds on the election day itself. So pre-poll is happening. People are going to these designated places to cast their votes even before the election day. So the voter turnout has already crossed almost 58% of 2016 voting. So that's one thing that's giving discomfort. Now, I guess around on Wednesday, we would see the actual impact of voting on Indian markets, because Tuesday is when the voting was happened. Plus, by the end of the week, we should have the results as well. Now, one thing very important that you should know about US presidency elections is this voting is only the you can say popularity voting. Once this popularity voting is done, these are the people who are electors of the presidency. So these will further vote to elect their president. Even in the last presidential election, what had happened is Helery Clinton won the popularity voting. However, when president was being chosen, Donald Trump came out to be the winner. So things could always be surprising for you. Historically, markets retain their existing trend post-elections volatility. Now, what it means, if you study last 3 to 4 elections, 2016, 2012, all other elections, what happens is the trend that's already there in the markets become volatile. However, the existing trend continues. So what I'm looking at is volatility would be there. However, post the volatility has settled down, we should see the continuity of the uptrend. That's what actually it means. Now, if you consider the situation in India, Axis Bank has reported its numbers, and that's very good numbers. HDFC Bank and Kotak Bank have already reported great numbers. GST collection again have surged to 8 months high. To be more precise, it's close to 1 lakh crore, first time since the coronavirus lockdown. Auto sales numbers are showing quite good. Banks, auto, metals should be your top picks for accumulation. Now, this is how you should be planning it out. If you are a professional trader, remember the quote I said, every man cannot have a reason to buy and sell every day. See, if you're a professional trader, you should not believe in luck or fortune trading during any event. All the professional traders avoid the event. So it doesn't make a difference if markets goes up by 5%. There will again be some profit booking. Markets will make some base, come to low, you can buy then. Even if there is a big downside, markets will come up for some profit booking, so you can short it then. So as a professional trader, you should avoid trading during this particular volatility. However, if you have that urge of trading, keep your risk management on top of it. Plus, avoid trading futures, go with options. And in case you are somebody who have already made good amount of profits in last 4 to 6 months, or maybe whatever your trading period is, you can be betting on the directions based on some options. It could be a fortune making thing as well. Rest, one thing you should of course do, if in case you get some volatility on the downside, go and buy some quality banks, quality metals, and quality auto stocks. My top picks in banks are HDFC Bank, Kotak Bank, Axis Bank. In auto stocks, I would prefer Maruti, Hero Moto. In case of metals, Tata Steel and Tata Steel, JSW Steel, and Hindalco are the best picks. So this is how you should be proceeding. Use the volatility downfalls for accumulating good quality stocks, and if you are a professional trader, avoid the market. That's what I would prefer. So that would be all in today's session. Hope this gives you a clear insight and visualization on how you should be trading the markets, what you should be doing in for short-term intraday or BTST trades, and how you should be managing your positional trades. So that would be all in today's in this week's mastermind session. Thank you so much for listening and watching. Don't forget to like, share, and subscribe. If you have any questions, any doubts, feel free to reply to me or comment on the video. That would be all from for this week. See you soon in the next week's mastermind session. Abhishek Raj signing off. Stay healthy, stay wealthy.